I'd like to introduce our panel discussion for today. We have a great session entitled, "What does the Bank of the Future look like post-COVID-19?" We've got a great lineup joining the session, and leading as our moderator, I would like to introduce Wissam Khoury, who is the SVP and General Manager of APAC and MEA for Finastra. Wissam, I'd like to hand over to you to get things started.
Thank you very much, Julia, and welcome everyone. Good afternoon and welcome to the first of 4 series of thought leadership webinars based on the theme Bank of the Future. They will run every Monday up until end of September, and today's main session will be titled, "What does the Bank of the Future look like post-COVID-19?" To set the scene, let's look about some of the researches that have been done pre-COVID-19, and one of them is the Open Banking and Collaboration State of the Nation Survey 2020. It was focusing around open banking, digital transformation, customer experience, use of data and advanced analytics, innovation and technology. During that survey, it was very clear that the industry leaders knew exactly what needs to be done, and in many cases, how to proceed. The survey itself reported more than 86% of global banks that are surveyed are looking to use open APIs to enable open banking capabilities in the next 12 months. There was just not the urgency to take action since we were at that time in prosperous times, but everything has changed post-COVID-19. To narrow it down to Saudi Arabia has witnessed a robust growth in the adoption of financial technology. And this is partly due to the banking sector cognizance of its potential to really be a major disruptor. If you look at what happened with the agreement of cryptocurrency and Ripple, and you look at the announcement to work with UAE for the new digital currency and the establishment of the sandbox, they are all testaments to SAMA's positive attitude towards fintech. The pandemic has really pushed banks to transform into intelligent digital financial service players using digitalization, open banking, and advanced analytics as really the mainstreams to drive change. It is certain that with the declining oil prices and COVID-19 pandemic in early 2020, this is posing great challenges for the global banking industry. In this context, KPMG Saudi Arabia highlighted that in 2020, the majority of banks across the world will inevitably face challenges, and the Saudi banking sector is no exception to that. However, the resilience and the strength of the Saudi banking system will allow it to cushion a little bit the economic fallouts of COVID-19. So after COVID-19, banking will be much different than it was pre-pandemic. The change in the way people think, the future of the workplace, the use of modern technology, and the value of brands will all really depend greatly on the time it takes to settle to a new normal. A look to the future provides a very good foundation for what needs to be done today. And for that, I am very pleased and honored to be joined today by 3 key thought leaders in the market that are really going to help us discuss this topic. So let me start by introducing them. First, we have Nujood Al-Mulaik. Nujood is the director of Fintech Saudi. Previously, she has served as a director for International Strategic Partnership at Munsha'at, the Saudi SME Authority, and she has a wealth and decade of experience in corporate and investment banking. So thank you, Nujood, for joining us. Our second panelist is Arivuval Ramu. He has lots of years of experience. He has built over 20 digital bank channels across Asia and Middle East as a chief architect, and he has 16 years of IT experience. And today, he's the chief technology officer of Tonic Bank. We'll also have this discussion thoroughly of what Tonic Bank is doing and how is that relevant to the Bank of the Future. Our third panelist is Mus'ab Al-Ghamdi. Mus'ab is the head of the business development, banking and insurance sector at Simah, which is the Saudi Credit Bureau. Mus'ab will be able to share with us how the banking industry has been performing, and will discuss his perspective on the future of banking in 20 and beyond. So without further ado, I would like to engage our panelists with the first question. And please, before you answer that question, I would appreciate if you can give us a few words about your organization, and then let's discuss together what does 2020 and beyond look like going into global and Saudi Arabia banking trends in 2021? And how do you see the industry shaping in the future? Let me start with Nujud.
Thank you, Wissam. Thanks for having me and representing Fintech Saudi in this discussion. So Fintech Saudi is an initiative led by the central bank, launched in 2018 to support certain projects and program-driven initiatives into the financial technology evolving sector in Saudi Arabia. So, and in 2019, there was another partnership with the Capital Markets Authority to join the efforts between both regulators in terms of supporting programs, education, community engagement, and investment, and I would say the startup fintech scene.
Thank you. Fintech and Fintech Saudi are very crucial to what's going to happen in the future. Obviously, the investments that are being done by banks and third parties, and how they started looking at Fintech initially when they came up. I remember they were looking at them as a threat. Now they're looking at the way to work with them around the new norms. So just Najud, before I move on to Arivuval, who's going to tell us what he is doing in Tonic, what can you tell us, or how can you tell us specifically the Saudi fintech, how will it contribute to the new shape of banking in the future? What are the plans of Saudi fintech?
Of course. So Fintech Saudi initiative has already launched, as I mentioned, certain programs that highlights the milestones in the progressive actions that needs to be done in the industry. So with that, we've launched the assessment tool for ease of understanding regulations. We've launched certain educational programs, the internship for the third year. We support the central bank and the Capital Markets Authority and the Fintech Lab and the Sandbox, of course. And we are actually launching in the 30th of September the Growth Accelerator for Fintech in Saudi. So it's focused on targeted to support growth stage fintechs in Saudi Arabia and regional. And that's going to be announced in 30th of September. Unfortunately, with the COVID-19, there's a certain delays when it comes to the launching of the physical hub of Fintech Saudi and King Abdullah Financial District. So we're aiming to launch that in Q1 2021. That's from a Fintech Saudi perspective milestones. And we launched our report this year, and we highlighted certain development in the local market. But I think the overall landscape banking evolution is around the commercial banking and the digital channels that are extended to the wider community and the retail banking. So that's where we have a lot of things to discuss about, of course.
Perfect, excellent. I'm looking forward for further discussion, and I am sure that Fintech Saudi is going to be crucial for the growth and how the banks will look like in the future. Moving to a real example. Thank you for joining us, Arivuval. Being the CTO of Tonic Bank, can you please give us an idea about Tonic Bank? And can you tell us, how do you see this industry in the future?
Yep. Thank you, Wissam, to give me this opportunity to share. Yeah, I'm Ramu Arivuval, Chief Technology Officer of Tonic Digital Bank. So we are headquarters in Singapore. We have the dream of building a neobank and rolling out across Southeast Asia. That's how we started in 2018. And we have knocked almost all the Asian regulators, and the regulators started opening slowly. By 2019, we came able to convince our first pilot market, which is Philippines, to launching our first formally licensed digital bank in the area of retail sector, with full banking license, which the full license allow us to operate on lending as well as deposit products in a virtual banking world. So as a Tonic, we are targeting mass affluent and emerging affluent market, and trying to build the neobank in a multi-cloud strategy, and trying to optimize, because the key is optimize the operational cost, automate the complete digitalization process from customer-centric to operationalization through multi-cloud, open API, data, almost all the three areas touched above, which we have really implementing. We're supposed to go live in this year, May 2020. Due to pandemic, we slowed down. We are waiting for market to reopen. We are launching our first pilot market with Tonic Digital Bank International Philippines by October 2020. Yep.
Excellent. Thank you. Can you tell us why now and how do you see the future of banking?
Excellent. That's another good question, Wasim. Why now? Now, so we don't need to explain because a few years back, telling the story to people, no physical branch, everything should be on the move. People can sit in their sofa and opening their bank account. They can able to fund it seamlessly, or if they are need of additional cash within a few minutes, whether you can account. That's a dream. When we explain to people, with the current pandemic, testify the banks and fintechs in a positive way. It give a clear runway path to us to explain our concepts are correct. Today, people are feared to move around, especially when you look at a different segment, either a mass affluent or elderly segment, or if you're looking at financial inclusion, the digitalization is one of the key aspects, either to coming to a deposit product or payment products or lending products. Today, people need it in the speed of agile. And how that's feasible, we need a right partner strategy with open banking, almost in the minute fraction of speed, which is very critical at this moment. The pandemic prone, people don't need to walk out of their home, go to the branch, wait in a queue for 2 hours, withdraw the cash, or fill the check, or fill the application, talking to the relationship manager. These all can be automated, providing there is a right technology and right partners provided. That is why this is the right moment. If all the fintechs across the world, including Middle East, to servicing either a retail customer or a SME or a business banking, digitalization and automating the operations, utilizing data and open APIs are going to be a key. And we are one of the pioneers in proving that it's going to work out.
Perfect. Thank you very much. And we're going to discuss further about what you have said in terms of operations, what has changed, the customer behaviors, the technology, open banking, and how does that work in shaping the future. Thank you very much. Musab, back to you. To talk about the trends in FY21 and how the banking sector should look like, tell us your views about where we are today and how do you believe the trends should continue moving forward.
Oh, good afternoon to everyone. It's a pleasure to be with you all. Just to give a brief to our viewers who don't know a bit about Saudi Credit Bureau. So SIMA works directly with all the financial contributors from banks, financial institutes, insurance companies, and so on. We collect that data. We keep that records in us and provide the credit reports as such. That's doing so in Europe, America, and other places in the world, to give them a much more sound decision making when it comes to financial decision making. Looking over what you have, Wissam, mentioned, SAMA has played, along with the Ministry of Finance, a huge role in keeping the banking industry strong for Saudi Arabia. So I'm going to display to you a couple of numbers that we have seen as of the end of Q2. So when you look at the consumer banking, focusing on consumer banking itself, when it comes to credit balances or accounts, Q1 to Q2, we have also seen a growth of almost 5%. But year to year, we have seen a very aggressive growth, which is 27.7%. But that's mainly contributed to one thing. It's because of the mortgage lending. Because the mortgage lending is being very, very driven by the government. on its initiative for that sector, to achieve, to reach the final economic stability. Taking that into consideration, when you compare quarter to quarter, the only products that we see when it comes to retail banking that increased is the mortgage. The rest have decreased. And that's very usual, common, because no one has been able to obtain any vehicle finance or credit cards or personal loans because of the current situation and how it's been from Q1 to Q2. So that played a huge factor in that. My view is for the remaining year, the main drive will be the mortgage. It will be the mortgage because of the backing of the government. But I really do not see it, and I could be wrong, and I hope I'm wrong, but I really do not see it growing as rapidly as it has been due to a lot of issues, some because of the COVID, others because of the introduction of the increase in VAT. The increase in VAT is going to play a big role in buying land and buying property. That's an increase of 10%. So that we need to see how the end of Q3 would end and get our numbers to actually see how that will play into effect. On another note, one of the main contributors also to non-performing loans, which have been the definition of non-performing loans, to anyone who missed a payment of 90 plus, so 3 months, is also the mortgage. So the mortgage has been leading it in both ways, have been leading it in increasing the market share and the balances, and also increasing the non-performing loan. So it will be very interesting to see how things unfold in 2020.
Thank you very much, Musab. And indeed, what's going to happen in post-COVID-19 is going to be way different than before. And only from this discussion, we can see that the regulator is highly involved, even by coming up with the new initiatives, or talking about Saudi Fintech and the new announcement that I hope, Najoud, you've mentioned, you're going to be 3rd of September, and also 30th of September. Also the new entrants in the market, such as new digital banks, such as Tonic. But all of this requires or confesses that there's something has to be changed. And things cannot continue as they are. NPLs, we have to look at them, like you said, how they're going to unfold in Q3. But coming up with the new business streams, coming up with the new revenue streams for the banking sector is obviously one of the things that is important in order to maintain the profitability of banks. And with that, if I want to just take the discussion a little bit further, knowing that this has been a disrupted economy with the new entrants in, with the new regulations, with different requirements from the users, habits have changed, requirements have changed. How do you see banks behave with this accelerated disruption in the future? And what will they do, the current banks that you know of? And also, when we talk to you, Ari Wavel, how are you seeing an opportunity for a new digital bank compared to the traditional bank? So let me start with you, Ari Wavel, and then we'll move to the rest.
Fantastic. Wasim, interesting to hear the word profitability, because that's a key for the bank. That's a differentiator as well. So let me step back and say, today when you say digital bank, we have started reading the news about Manjos, Sterling banks, the valuations are going down. So the number one, everybody start focusing on number of downloads, user experience, automate stuff. But the key, what they're missing is the profitability, how to make money, what are the different revenue streams, what are the different products. Is it only deposit going to make money? Is it a current account going to make money? No, that's where need to slightly wear a different cap. Okay, how to make money through the payments? Is it by fees and commissions? And is it a revolving credit card? Are we going to differentiate different lending products? And what is the APR we are going to place it? And even the lending product, we need to look at it differently. What are the different unsecured product we can place it with rightly Musab, explained about credit bureau, which is playing a crucial role. You just don't look at your traditional data, look at even though that time is very crucial, giving underwriting on specific lending products are going to be used with your e-commerce behavior, your additional data on your mobile data. We call it as alternate alternate data using your mobile behavior. So you need to look at alternate data to decide whether he's the right potential customer. Can we give a lending? So the profitability and the revenue stream need to be clearly drawn. That is why we step back, we revisiting our business model, we slow down our launch. What is the relevant product for this particular moment for the market? And along with the user experience, which you rightly said, user experience where the behavior today, people don't want to go out, which means whether a lending customer or a deposit customer, they want to sit at home and want to do it quick, quick transactions. And if you look at people, elders, they want to save the money, they don't want to touch it. Youngs start taking out the money. So we can see there is deposits are going down. And the lending side, more and more people want more money because we need to find out right who's the right people we can lend it, especially not getting into delinquency mode and getting into a problem. So, and the big opening opportunity today was Zim and team, the payment space. The payment space opened up very huge. I think almost every week the market is predicting 2x to 4x fold every week. You can see the e-commerce opening up. So all we are tapping into the new ecosystem business where how to tap these partners and taking them into, for example, buy now, pay later option, payday loans. So you can bring a lot of things into a ecosystem, and even kind of payroll companies, and even some instead of fully unsecured loans, probably put some security around it. Example, if it is a payroll companies are tying up with them to have a lending to the trusted customers. So some kind of protection to around, not just focus purely on customer-centric customer experience, but give the control to them, but ensure the bank has a limited control to have the profitability in mind. Yep.
Perfect. Thank you very much for what you have mentioned, and I think you summarized it at the end well. The simplest way of looking at it, again, simplest way, a new bank such as Tonic Bank or any, by definition, a new bank or digital bank, their biggest opportunity is that they are customer-centric. But the biggest challenge is profitability. While if you look at the conventional bank, it's almost flipped. Conventional banks today, for all the reasons that are right, they cannot focus as much on the customer because of their age, because of the systems that they are using, because of regulations, because of size. They cannot do that, but they are quite profitable with big balance sheets and they can afford further investments. What I liked about what you just said is about collaboration. You mentioned ecosystem. And I think with this accelerated disruption, we came to a realization that we have to work together with the fintechs. And this is why we were discussing open APIs and open banking. So it's very clear from your side, Ali Bouvel. Let's move, if you don't mind, to Nujud. Now looking at the traditional banks, and you are playing the role in the middle where you are developing an economy, an ecosystem where you have fintechs that can work with the banks in order to adhere to these new changes, new dynamics, and to accelerate the adoption of newest technology. So how do you see the fintechs playing a role in this disruption, and what value do they bring to the existing banks in the kingdom?
So I think I want to just start with saying that the past 10 years, since 2010 up to now, in North America has been over 27 billion investments into fintech opportunities and fintech platforms in North America at supporting SMEs. So with that, and that's in the Accenture report recently around the banking landscapes. That we can see aggressively that fintechs are actually focusing in terms of platform extension to support SME growth. That's one area that we can't ignore. And with that, we can see the wave of fintechs in Saudi Arabia. If you go and look at the number of fintechs supporting SME lending or peer-to-peer lending is focused on SME sector. And I think there are a lot of topics around the current situation, mortgages and non-performing loans, and then there is the interest rates and liquidity and the risks on a ratio for banks to keep these reserves safe and within the caps that central banks require that, and then the incentives with the interest rates themselves to encourage people to take loans and start spending it in the economy. So we're not living in a very, I would say, predictive environment. With that, and credit bureaus are looking at other sources to and cushions to take more information to validate these credit scoring elements that can make banks comfortable to extend these loans to them. So, and all of that, I would say that fintechs can bring another additional revenue streams for banks if they target them strategically. We've seen certain partnerships with lending platforms in Saudi Arabia, partnered with banks to support more exposure in terms of lending, micro-lending specifically, efforts around the banks. We've seen banks actually utilizing their current license and managing that and branching and creating a sub-brands into digital banking arms. I don't like to mention names because we're not marketing on behalf of them, but they're known in the market. And we know that for a fact that in the next 4 or 5 months from now, we might hear, and we've already heard certain rumors around digital banks rather than digital banks, and then there's challenger banks, and these are neo banks, and all of them are actually looking at ways of extending products based on new behavior in the market rather than just cutting cost and using technology. The advantage of those challenger banks and neo banks coming into the market, that their core system is already built on the newest processes and procedures in line with what the central bank is trying to do, as central banks are trying to push traditional banks faster to adopt these technologies in terms of onboarding, KYC, and using AI in certain process. And a lot is happening. I mean, biometrics is being tested heavily with banks with certain ethical considerations around it and frameworks. So I think with that, fintechs can bring value to banks, and banks can unlock opportunities based on the strength of a bank in Saudi. In our region, we are going to see increase of smaller sized banks, regional banks, I would say, and merger in large banks, as we've seen the trend previously in a couple of big transactions between banks. So with that, I think we're going to see more license and regulation and hybrid and flexible frameworks that can support specific verticals for fintechs.
Perfect. Thank you very much, Nujood, for your input, and I totally agree. The trends in Saudi Arabia, we can see them. Like you said, big mergers are happening. New neo banks, challenger bank, digital banks are seeing the sun. And also, like you've mentioned, regulator is really supportive and is really pushing the traditional banks to talk technology-wise, to open their banking systems, to open their APIs, and to be able to utilize fintechs. Because without having that, then it's going to be very difficult to embrace the new wave of fintechs without really investing in the technology. And you mentioned the word platform, which I really love, because at the end of the day, the fintechs should act as one side of the platform, servicing the traditional banks and even the new neo banks and challenger banks by providing fast time to market solutions that are really relevant post-COVID-19 in a seamless way or in an easier way than traditionally building a new system from within a core banking. And you've also mentioned that the Credit Bureau has a role in that as well, because the SME is really one of the focus, not only locally, but also globally. We know very well that in terms of digitalization, corporate banking, let's put it this way, is a lagger compared to retail. Retail have come up with solutions much earlier than that. But looking at corporate banking, I believe that this is where the new trend and the new solutions and new revenue streams is going to come up with the SMEs, and you're seeing that with the fintechs that you've mentioned, Nujood. I totally agree. Musab, how do you see the SME business and the banking have to change in the future in order to be able to accommodate this huge accelerated disruption that's happening post COVID-19? And what do the banks need to do?
Well, I'll just talk in general. So from before the pandemic, before COVID, and from last year, we have seen a change in how banks are expanding their networks. It's not more about a physical footprint anymore. They have reduced their branches. They have focused on other means of payments, just like Abu Bovil mentioned. Right now, basically, your smartphone is exactly like your credit card. They go hand in hand together. So they have come up with these solutions. If you're talking about the SMEs in general, the SMEs has, especially talking about 2020 with the COVID, they've had a huge hit. And they've been backed by SAMA, by Ministry of Finance and the banks to defer the payments, give them a chances to move forward. But we've also noticed that banks are approaching us to see how they can better score their clients. So how to so how to score them better? What should they take into consideration when scoring that, and not just keeping that, how to link that with an IPI, with a decision scoring method to to build their own cutoffs, to make it much more agile and follow with the trend and flow of the market itself. For the time being, I think it's going to be a rough year for the SMEs, but with Fintech, Nujud and her team and everyone else, I think there's going to be also a lot of support. So with that support, if it wasn't for the COVID, I believe there would have been a huge development. But the COVID maybe will play a big role in postponing that development till probably 2021 and on and forward. So I think the banks still have a lot to go through, a lot to enhance. COVID itself is unfortunately is very bad to the world and everyone, but it actually is giving banks the different solutions on how to approach and find solutions for SMEs, retail, and others. So I think banks are having that type of conversations that they need to take forward on how to benefit from that.
Thank you very much, Musab. And I can only concur what you had just said. As a financial solution provider and specialized in open banking, open API, and created the first financial platform as Finastra, I can see lots of interaction with the Saudi banks. And I can see that everybody is investing in technology, investing on opening their APIs, want to work with fintechs, want to come up with a new revenue stream and new solutions. And before I move on to go details, one of the questions that came up, which I think is relevant, and I will go back to Arivovel as well, based on your business model, is there a synergy moving forward for unsecured lending in a large scale using neobanks in Saudi Arabia? I believe that was the question. But I would like to first address it with Arivovel, talking about your first market being Philippines, knowing that there's lots of unbanked population, I think more than 75% of unbanked population, and you're going after lending and you're going after depositors as well. And on the lending side, talking about credit bureau as well, how easy or what are you targeting in terms of unsecured loans? Where do you see the opportunity in that area?
Yeah, fantastic. Yes, coming to bank profitability, lending is the only product make money, which is a frank truth as well, where you can really make money as a bank. But coming to mass affluent, emerging affluent, which we are talking about youngsters, the age of 21 to 27, between that range, where their earning incomes are going to be couple of $100 US. In this market, probably you can see $250 to about $1,200 range of salaried people, and with no credit records most of the time, where you don't have any credit bureau records or not stable record where you can underwrite them. This is the huge, even though you want to target them and you want to really lend and make money, the biggest thing is the traditional credit bureau system will not give you the clear picture, whether this is the right person. Or if you're tapping another segment, which is financial inclusion segment, which you rightly said, a huge 70% of financial inclusion market is untouched, specifically from lending perspective. So which needs two mindset. One is how I'm going to underwrite that particular segment, using what are the stable data I'm going to use, which is rightly said, what are the social media data? What are your e-commerce transactions? What are your telco data, available data? What's your mobile data, mobile behavior? These are the new artificial intelligence based, where you can use the SDK, scrap the content, analyze those, and keep the pattern in place, and see over the pattern how these guys are behaving, and is the score is deviating over 3 months. Then do the pre-approval, or cross-sell those products. This is one part of segment where we are talking about. Second part of segment, which I explained earlier, the partnership, where I have partnership with Finestra as well to similar open API. Why? The main reason is these products are not supported in a licensed product where you deployed in 3 years or 5 years back. You need a co-creator who can create all this new idea, quickly, fast react to the market. So for me, I onboarded Finestra is one of the reason, who my partner who can co-create this value product, where quickly I want to build a unsecured lending product, which is a key, but that need to go with the specific use cases, salary backed, virtual card based, specific payroll based part. These are all the new digital use cases which need to be built closely with core banking, because when it coming to lending, not loan origination and underwriting, it's more collection and delinquency management, how you maintain your reserves and the things which is important. So it's all most of the things need to be done start from customer engagement channel, which is a customer centric UI, to your credit decision engine, to your core banking. This need a complete partnership along with my external partner, which is who is the payroll processor, who is the e-commerce lender, who is allowing me to lend this money. And of course, the partners like behavioral data guys and alternate data providers to underwrite these people, which is not exist in the traditional world. So this is the complex system. We need to build it in a building blocks, and these building blocks need to be loosely coupled. You need a business model and technology together.
Perfectly agree. Thank you very much for this feedback. And just moving the discussion a little bit, and in line of what you have mentioned, if you look at the main themes that have shaped the banks in terms of operations for the future, the main changes, at least in my point of view, and they've been mentioned throughout this discussion. We've mentioned the word, and I think, Aruvel, you've mentioned real time. For example, like everybody now wants information in real time, right? So this is not even a question. Second is self-service. We are used now that the end user, be it an SME or be it individual, they really want to look at the entire interaction with the bank, and they can do their own service in a very frictionless digital way. Second thing you've mentioned as well, but not in that word, is transparency. Every consumer, once you have visibility of the real time, you've mentioned something about being relevant and sending them the right information or right product, such as unsecured lending. This is part of the empathy, taking into account not necessarily the traditional way of calculating credit, which is the financial ability, but previous behaviors, activity on social media, all of this comes into the picture. And being able to really endorse this as part of your day-to-day business as a financial institution, utilizing data, utilizing AI. What I think you're saying, and I agree with, is that it doesn't have to do it yourself by yourself. All what you need is open technology and the business model. And then the smaller fintechs, the developments, all of this can come on board quite quickly. And the solution that makes sense today, maybe in 6 months, doesn't make sense, get updated without really the requirement to change major in your infrastructure.
Perfect.
So this is what I call being an intelligent player in the market as a banking sector. Obviously, being a challenger bank or a neo bank, you get this as part of your business plan. What I will be interested to hear from Nujud and Mus'ab, if a traditional bank, especially with the size of the banks in the kingdom, we have 13 local banks with the entire economy of Saudi Arabia, so there are by definition 13 large banks. How do you think they can move to what we've called intelligent player post COVID-19? And what are you think the challenges that they're going to face by becoming an intelligent player?
Thank you for asking this question. And we have to always highlight the risks. It's easier said than done when it comes to large banks moving or balancing between the user experience and innovative channels that faces customers. There is a huge risk. I mean, and only in 2019, as per Sista's report, there's more than 100 million pounds cost of fraud into that market in 1 year. And with that comes the risks on how they can balance these user experiences platforms and using the technology. We know that more than 22% of the global banks are already adopting a new AI testing use cases and machine learning. And with that, there's the growth is projected up to 2023. Where I think I have written that number here, where we expect that the growth will amount into $126 billion in just a few years out of these kind of adoption of these solutions. So with our bank specifically, the way I see it, the risk is higher in terms of going aggressively with their own channels. And therefore, they really need to understand the phases that they need to go with internal, whether it's a legacy system, whether it's a facing customer solution, and the balance is very important. I mean, we can't risk one fraud transaction and that applies on fintechs, by the way. If you go and look at the frameworks that introduced by the central bank for certain fintechs to work with when it comes to channels, digital channels, user experience, cybersecurity, and checkups and onboarding process is not as easy we expect them, because really the stakes are high. And with that, I think we'll continue to see progress in use cases across. The other area is the data. It's not only open banking for financial institutions today. The secret, and I think Arif will, if I mentioned his name correctly, mentioned that your data is not dependent on whatever you have in your financial institution. It's just commercial behavior, it's telco behavior, and with that interconnectedness, I think the role of credit bureaus becomes even more crucial to determine. So it's just a complex environment that we're working on, and I think we're going to see banks actually struggling to move faster than we want. We're pushing banks to move faster. We're pushing banks actually to collaborate with certain fintechs, take certain risks, utilize other platforms. But I think with the current situation, things are not as rosy as we expect them to be in the financial sector.
Right. Thank you very much, Nujud. And yes, the pace of disruption will differ. And the bigger you are, the slower you are usually. And talking about the banking sector, and also the importance, like you said, the risk is higher. When the stakes are higher, then you have to calculate really any move and what's the impact of that. So I totally agree.
Just to
Sorry,
add,
go ahead.
With the mobile banking resiliency and during COVID, that was a huge test in the past 6 months. And the number that I got messages from all the banks that I have accounts with, which I'm trying to reduce, is number of maintenance happening is higher than I expected to happen. I mean, every week I get a message that the online banking is going to be down for maintenance. So with that, I think there is a lot of pressure for banks to move to that.
I totally agree. You know, when the dynamics change and the users surge like there's no tomorrow on this, and obviously the systems are not maybe built for that, then challenges came up. I totally agree. And that's why I said, what is the role of the intelligent player? And you said it right. They have to balance the regulator, the risk, and the opportunity all into one. And I believe that, like you said, interconnectivity is going to be important, not only for collection of data, but also to be able to provide these unique experiences in a fast time to market way. And talking about connectivity, for example, to credit bureaus, Musab, do you see any change in behaviors with the banks, with the credit bureau post COVID-19 in terms of connectivity, in terms of accessing more data, in terms of requests for extra information? Do you see the players in the market moving to a new intelligent way of doing business?
Just on a keynote, digital transformation is a key challenge for everyone, if it's for banking or not. And I think it's more of a, it's that thread of a needle, between beneficial innovation and harmful disruption, which they would need to focus on. My recommendation is how to approach this is just start small and focus on what you see much more beneficial. Don't change your whole system to digital right away. See what you can benefit from and start from there, as well as it has to be a team effort, a full organization commitment. It's not just one department that's trying to change and the others are resisting that. So it has to be a full commitment. And finally, the most important thing, it should come directly from top management. If it's not a priority to them, it's going to be very tough to move forward with anything when it comes to that. And on that note, yes, we have seen how COVID and before COVID, from 2019, moving forward, how banks are actually approaching us to dig in depth more on their current wallets, to understand more their current clients, how they can benefit more from their current clients. They've been asking for much more in detail analytics that would help them in actually building and developing the right strategies for them to be much more proactive. When it comes to being from the business side, when it comes to cross-sell or upsell, or from the risk side and also collections, they've come and asked, they've actually been much more precise in certain types of information they need. We don't need all the credit information or the telco information. We're looking at these kind of ratios, this kind of information. On top of that, because of CIMA, we own a license of softwares. So they've also asked for us how they can benefit from these softwares that would help them in their decisioning and their collections. So we've seen that trend changing in Saudi Arabia. The majority of the banks have been following through. It started off with the big banks and the small banks. The middle banks are moving there, but that's how you're seeing it. That's how it's going forward. So yes, we are seeing that trend. We are seeing how things are being changed, and they actually, the banks are being much more digitally conscious when it comes to making these decisions and understanding what they need and learning from their mistakes that they've done before. So as CIMA and as working with retail banking and corporate banking as well, there has been a significant increase of the types of data they want, the types of strategies and analytics they're looking at. And CIMA is trying to enhance this information, trying to enhance to keep up with also the revolution that's going on with the fintech technology.
Thank you, Musab, very much for what you have just said. And just in the last 10 minutes, I'm going to ask only one more question related to what you have mentioned for all three. And then if there's any additional questions from the audience, we'll try to take them. Although throughout the presentation, we've been seeing some questions that are being already answered. But I totally agree with you. I want to comment on 2 points that you have mentioned. Number one, it's not only technology changes or disrupted, it's the mentality, the way of thinking. So the human capital within the organization. If the CTO of an existing bank believes that whatever strategy they have built 10 years back is going to work now, then I'll be afraid, and it has to start top down. I completely agree, and I appreciate you've mentioned this, because the biggest challenge is the change of behaviors. Technology, I have to say, I'm a technology person, there's no problem. AI has always been there. Machine learning has always been there. We are not creating new technology. We are utilizing the technology in a smart way by opening up our solutions, by being able to integrate faster. But the real technology is there. It's the mentality. And I highly appreciate what you have mentioned. And I highly like that you're seeing actions in the banking sector by the large and by the small, and hopefully the middle ones will follow, that they are looking for new ways into looking in their business, new data, new information. And with that, with my last question, specifically around this, how do we see the existing banks in comparison to the new banks, such as Tonic Bank, being able to utilize the new technologies, such as fintechs? And I'll start with you, Najud. A company or a fintech that has 7 employees and they have developed a nice KYC app or a nice onboarding app, how is that going to be integrated with a bank, without naming, but a huge bank in Saudi Arabia, where they are used to work with Finastra, for example, not in a small fintech? So how do you see this coming together, this marriage?
Of course, it's challenging the way it's being right now. The competition is aggressive in the market, and with the growing industry in Saudi, we already have segmented the fintechs into 3 main categories, which is the B2C, where they need to be licensed by the central banks and the Capital Markets Authority, and they need to have a certain capital requirements that they need to secure, and then the B2B, and then the B2B2C, and with that comes the challenges to partner with financial institution or capital markets institution. It's in the capital markets industry. It's easier because the environment in the capital markets driven by certain consumer behavior advisory and systems. So it might be easier to tackle certain opportunities in that domain. But when it comes to other domain, we're dealing with banks. Banks are well established and well institutionalized with certain providers, but we will encourage banks to think ahead. We've seen, and I'll mention JP Morgan, because I worked with JP Morgan. I mean, JP Morgan has Area X initiative, where they actually developed this program from 6 to 12 weeks to test solutions with startups and start integrating them. They've invested 25 million only in startups and fintechs in 2019 only. So with that, the mindset, the shift of the management of the bank and the mindset is very important towards looking at opportunities. It's easier for banks in their comfort zone and you still use the same system that you're using, or they think that Temenos is doing something different, but hey, Ripple is competing with Swift and all of that. But the really door of opportunity of a bank is to test, to open up trial periods with certain fintechs and technology provider, or solutions that are targeted to support the financial sector and transaction. I think if banks need to open up that window for testing and adoption.
Thank you very much, Najud. And with that, I'm sure Ayuval has lots to say. Just to set the context, Ayuval, since you are utilizing latest technologies, and since Najud mentioned about probably the 90-day sprints, the 180-day sprints, and how can you onboard new fintechs, what's your experience with that, and how do you believe technology can help in riding that wave with the least risk exposure?
Yeah, thanks, Wasim. Najud rightly said. So whether you're a neobank or challenger bank or a traditional bank, doesn't matter. With the current situation, we all need to act fast. Number one, the lower risk is finding the right partner. Number two, the right partner who's flexible to build things for you, which is the risk awareness. Anticipate there are new product need to be rolled out, new features need to be rolled out, need to be tested in the market in a small way. And if that small idea wins, they need to scale it up. That's the approach either of the player need to take. So building that kind of quick turnaround, the new product, new features, you need a partner who can able to build that scalable system in a loosely coupled way. That's why day one I said the loosely coupling is very, very important. That's driven through technology. Not that is where the open APIs are,
microservices,
core banking, and auto scalable environments, all very important. Today, as you rightly said, the systems are down because they are not testified for the greater scalability of transactions. So number two, when you want to onboard multiple fintech partners, there are different people use different technology to wire it up. There are still some people legacy, some people who APIs mode, some people file-based mode. We need to take care of all this kind of technology players to integrate and provide the best customer experience. So that onboarding, you need again the open banking platform, where our open API platform, where you need loosely coupled way to integrate with multiple partners. That's again falling back to technology, how quickly you can integrate and test that idea with a different partner instead of building by your own. Even though you have a multi-billion-dollar in your account, building something is not easy. You need the right partner, you need to integrate. And yeah, that's the second. Third, no compromise on compliance and cybersecurity, irrespective of what you do. There's the current time, everybody working from it's a home or different place, the employee or a customer. So the technology needs to be strong enough to protect customer as well as the bank. And for that, either the platform what you're onboarded already, or the platform which you needed today to onboard, which need to be highly resilient and cybersecurity covered. Or you need to onboard another layer of cybersecurity to ensure, because bad people always wait for you to tap, and this is the right time for them. And no compromise innovation without security. That's still compliance and cybersecurity to complement. But again, technology, which is.
Thank you very much for your input. And yes, also as a technology provider, I can also add, which is counterintuitive, is that no vendor, you should not trust any vendor, including Finastra, if they tell you that depend on me for innovation. The true partner, technology partner, is what gives the end user, these banks, to be able to innovate by themselves, such as open architecture, open platform, open APIs. Interconnectivity is a must, and innovation cannot be cannibalized by anyone. And the future, like we're all coming up to a conclusion, is being able to come fast time to market with 90-day sprints, easy integration in a very secure way, but doesn't have to come from one vendor. The vendor that gives you the ability to do that is the right technology provider. Knowing that we are pushing the last 2 minutes, I just want to, and I see that we have asked most of the questions, but there's one question that came up, and then end up, once you answer that, please, with the final word you have for the audience before we wrap up in the last two minutes. I'm going to read the question as they have come. The last question. To Musab and Nujud, with ongoing mergers of big banks in Saudi Arabia, SAIB and Awal first, and now we're seeing Samba and NCB, would that create better space for new banks to evolve, I think, in KSA market? Are we going to see new digital banks in Saudi Arabia soon?
Well, if I have the liberty to answer first, I think we already heard of from the central bank governor himself that there is a couple of application under processes currently in the respect of being digital banks. So yes, of course, we are going to see certain digital banks coming in the market. We might see joint ventures between certain local banks and other neobanks if these discussions are successful to enter and penetrate the Saudi market. With the mergers coming, well, then there's a room for regional smaller banks and very targeted banks to be in the market.
Makes sense. Thank you very much. And final word from the audience before we wrap up in 2 minutes. Let me start with you, Musab. Do you have any final words for the audience about what's the bank of the future? How does it look like? And your feedback from this session.
Well, I think that, like I said, digital transformation is something that's challenging for everyone. It's coming, and everyone has to be on board with it. And as it's changing rapidly. And with that, new implementations have to be done. New business models have to be created. Living in the past will not bring any satisfaction to anyone. How banks would look in the future and digital banks, I'll just say I'll carry on what Nujud mentioned. We have been in discussions with a few of these digital banks that are coming, and with our discussions that's ongoing, digital banks are going to be very, very exciting, very, very new to especially to the Saudi population, and how we take things forward, and very, very convenient to every consumer and SME and so on. So it's a very bright future, and we hope for the best, and we wish for the best for everyone. Thank you so much.
Thank you, Musab, very much. Ali Bouval, last word.
Yeah, awesome. Yeah, which rightly said, I would request all the new, digital transformation people who want to aspire it, you want to convert your bank, or you want to start up the new bank. 3 things keep your in your agenda. One is customer-centric and simplicity in all your digital touch point which you're building. Second, profitability is very key. Ensure everything you keep profitability in mind, not VC supporting just VC and alone. Third, your SaaS-based business model, which we are working on. So everything should be start small, go big, and don't invest too big money. So always the SaaS business model is very important, either a business model or technology growth or technology investment. Put that 3, at least minimum these 3 strategy. Yeah, success yours.
Thank you very much, Ali Bouval. Thank you, Nujud. Thank you, Musab, for a very interesting discussion. Thank you for joining us today. And may the audience have a great day. And we will connect, I'm sure, next Monday with a different topic about how the bank of the future will look like. Thank you all.
Thank you.
Thank you all.
Thanks for joining, everyone, and sharing your insights. Hope you all enjoyed that. And as Wissam said, please do join us next Monday as we explore the current state of the retail banking landscape and what the future and that looks like. Thanks again. Bye.